A very good morning to all of you, ladies and gentlemen. Fantastic. I'm glad that we've got a resounding response from many of you because I'd like to warmly welcome you to the RMB 2026 Think Budget. Now, as you can tell, we actually have a robust conversation that's going to take place over the next hour and a half. This is where we're going to distill the details, the outcomes, and most importantly, the impact that the 2026 budget that was delivered by the Finance Minister on the behalf of National Treasury just yesterday provides us with a lot more clarity and context, especially for the world that we operate in. Whether you're a South African citizen, whether you're from abroad, ultimately leading businesses here in South Africa, creating jobs, and paying your taxes, we all have something to say about this year's budget. It feels like there's a renewed level of optimism, especially given the fact that we're seeing a heightened level of debt consolidation, some clarity in terms of support that's being offered to entrepreneurs as well as South African households, and most importantly, more clarity in terms of the outcomes that we see regarding the strategic reforms that have been implemented primarily within the energy and transportation space. So today, we welcome you and thank you for your participation. I must say it's really refreshing to see some familiar faces that have made their way back to the RMB Think Budget, leaders in corporate South Africa, not only of capital markets, but also JSE-listed firms which are also present here in the room, and key representatives as well within the public sector, helping us manage our finances, maneuver the dynamics we operate in, and ultimately create a robust economy that we all want. So, ladies and gentlemen, my name is Gugulethu Mfuphi. Over the next hour and a half, I have the pleasure of being your MC and moderator for today. It's going to be a jam-packed session, but one that's going to be very fruitful. You can tell that on stage we do have the Deputy Finance Minister of the Republic of South Africa, Deputy Minister Dr. David Masondo, together with the Chief Economist of RMB joining us. And throughout the course of the program, not only will we hear feedback from the Deputy Minister in terms of some of the key items we should be mindful of from the budget speech, but we'll also get clarity and understanding as to what this means for the spaces that we operate in. We'll review the fixed income space, the exogenous factors that are influencing South Africa's economic performance. We'll also take a look at some of the macroeconomic fundamentals, and most importantly, the outcomes on our people. What this does mean, given the fact that South Africa does find itself in a municipal election year. Most importantly, your interaction and robust engagement is strongly encouraged today. So we want to encourage you here in the room, and to those of you who are joining us online, we welcome you too through our LinkedIn feed to actively engage in asking your questions, probing the minds of leaders in National Treasury, as well as the investment and macroeconomic experts who will be joining us here in the room. I'm hoping we're all keen, eager, and excited, have jotted down some of the pointers that we'd like to address, and most importantly, also honest in terms of our feedback regarding the budget. To help us open up this morning's session, ladies and gentlemen, please help me warmly welcome, already seated on stage, representing RMB with a wealth of expertise and insight into economic technical data, but most importantly, translating it for leaders like yourself, Mr. Isaiah Mhlanga, who's the Chief Economist at RMB, to give us our welcome address, following which he'll introduce the Deputy Finance Minister, Dr. David Masondo. A warm welcome to him, please.
We are also especially honored to have Dr. David Masondo, the Deputy Minister of Finance. He usually gives his own explanation of what the DM means in so many different facets. To us, that's the Deputy Minister. He will explain the other DM later on. Today's session takes place against a complex economic backdrop, and we're trying to navigate the global developments that have an implications on our own economy, but we're also trying to navigate the domestic constraints that are hindering our own economy, from water issues. We still have energy constraints should the economy grow faster than where we are. It's security issues for which the budget outlines where is our priority in terms of addressing those. And hopefully the Deputy Minister is going to give us those priorities as laid out in the budget. Debt sustainability and risk premia is something that the budget would have addressed to an extent, but we would need a lot more from the Deputy Minister. Infrastructure investment is one of the key policy reforms under Operation Vulindlela that is being driven. We could say is too slow, but we have seen significant progress over the last 2 to 3 years, and we have to take a pause and give credit where it's due, but also still demand a lot more, because the potential that we have as a country, it's a lot more than what we are delivering at the moment. And then, of course, tax policy and the implications on everyday humans, corporate strategy, is quite important. And lastly, the implications on the broader trajectory of the economy, of what the Finance Minister spoke about yesterday. So, Minister, your presence today reflects an appreciation that policy effectiveness is strengthened through engagement. And we appreciate your availability every time we call on you and your team and your colleagues at National Treasury, because it is through these engagements where you get feedback from people that operate in the real economy, from investors that buy government bonds. So we appreciate your presence every time we call on you. To all our clients and partners in attendance, thank you very much for joining. Your continued engagement also underscores the importance of platforms such as these in shaping informed decision-making and strengthening confidence in South Africa's economic prospects. I'm also told that the Minister will be joining us later on, if we are fortunate enough, but I think we are already fortunate that we have the Deputy Finance Minister here. Ladies and gentlemen, it is now my pleasure to invite the Deputy Finance Minister, David Masondo, to offer his remarks on the budget, and then we can engage thereafter. Thank you very much.
No, thanks, Isaiah. Indeed, the Minister, he should be joining us. I saw Njabulo, one of his advisors here, and he can further advise us that what I'm saying, it's correct. Thanks, Gugu. And I'll be brief, because I think Isaiah is right, that for us, these are important platforms to also get feedback from you. We've spoken a lot yesterday. The Minister has laid it out, and your analysts as well have definitely looked at the budget. So I'm not going to repeat what you already know, what the Minister has already said. I'll just say two things. The first, in the context of what is different between this budget and the last year's budget. The first thing is that we are not going to have a budget 2.0, 3.0 is delivered, is going to Parliament, it will go through the motions. So that is great. And I think it also speaks to the stability of the GNU, this political structure that we've established post-2024. And I know Gugu has said this budget takes place in the context of local government elections. In my assessment and other people's assessment, the local government elections will not have a bearing on the stability of the government of national unity. Whatever happens in local government, it won't have an impact on the government of national unity. There were attempts by some of the members of the government of national unity, the parties that are in this multi-party government, when they wanted to use some disputes and disagreement in some local municipality to say, yeah, if you don't do this, we're going to withdraw nationally, and so on and so on. But that has been sorted out. That is part and parcel of the protocols of the GNU. Issues that happen at the provincial level, local level, should not have a bearing on the stability of the government of national unity. So that's the first great thing, no budget 3.0. The second thing which is worth noting, you recall that we had announced that if we withdraw VAT, we don't withdraw the expenditure lines that we had inserted in the budget, and we said if we do this, and if SARS does not give us the compliance revenue, debt revenue, because you recall that we allocated them 7.5 billion over the next 3 years to help us with the debt from those ones who owe South Africans, but they are not paying. And we said under those conditions, we're going to increase the tax by 20 billion rands. Well, we're not going to do that. The minister has said it. We're not going to do that. And the reason for that is not because of differences within the GNU. Unlike last year, where the difference are about VAT and all that. It has to do with the fact that I think we have managed our macroeconomic policy very well, because one of the key pillars of our economic growth is a macroeconomic stability, keeping our debt at sustainable level, and making sure that we've got price stability, low inflation, and also a stable exchange rate. So on the debt side, I think our debt is stabilizing very well, and we've seen it also in the rising confidence in our economy. I mean, the yield is one of the indicators of you guys that you are comfortable. The higher the yield, the higher the risk. So if the yield is going down, we get happy that what we're doing is good. Because I mean, if the yield is high, it means the risk it's high, and therefore we have to pay for the risks associated with our credit worthiness. So as a consequence of the yield going down, we've also seen the debt service costs also going down. So in the next 3 years, our debt service costs are going to be lower by 10 billion rands. So why would you want to raise tax when it's easier to raise money from the market? So I think what we've been doing for the last 5 years, just making sure that we keep our debt at sustainable level, is paying off. And like I said, the debt service costs, they are going down. And from the revenue side, we have about 20 billion higher revenue than what we had expected. And that comes VAT, income, corporate tax has also performed very well in that regard. So under these good macroeconomic conditions in which inflation is also low, because interest rates is a price that you pay, and that is determined by the real interest plus inflation. And if the inflation is high, it means that the cost of borrowing is also going to be higher. So last year, I remember when I came, where was you guys, you confused me. I can't remember where we were when you were, and that feedback also helped us, in which you guys said, can you guys settle this matter around the inflation target? And I think the minister, as well as the Reserve Bank governor, they sorted out that matter. And I think is paying off from in a whole range of ways. So what we've been doing in maintaining the macroeconomic stability, and as I said, low inflation, stable prices, stable exchange rate, sustainable debt, is basically paying off, and that's why we not really increasing taxes. So it's not because there are disagreements on that. Of course, there have been disagreements over that, but it's for different reasons. And we're still committed to accelerating the structural reforms. As you know better than I do, that part of the constraints on our economy was on the supply side, supply of electricity, water, freight logistics, skills, and so on. And through Operation Vulindlela, we've done a lot in so far as dealing with those constraints. And of course, there was some uncertainty on the unbundling of Eskom, the transmission company. In the electricity amendment regulation is called the TCO, Transmission Systems Operator, which is supposed to be a standalone company in the context of creating a wholesale electricity market, that it cannot be a subsidiary of Eskom in the context where you've got a wholesale market. Eskom will be conflicted in that regard. And I think the president in the SONA has given a policy directive insofar as that issue is concerned. And there's a small committee that is going to work out the clear implementation plan to make sure that we've got a wholesale electricity market in South Africa. And of course, the Electricity Amendment Act says that by 2029 December, we ought to have the TCO as a standalone company, also with ownership and control of the transmission assets. It doesn't have to wait for 2029, and I'm certain that we should be able to do it before that. I think the president has provided a clear directives that we need to move with speed insofar as this issue is concerned, because some of the investments that have been done by different actors different investors in the energy space, they did this at the back of the establishment of a wholesale market in which the TSO, which is supposed to be responsible for enabling market participation of different generators of energy. So that reform is on course. Freight logistics, it's also in course. So the structural reforms, we are still committed to that. And for me, the issue will have to be acceleration and acceleration. On the infrastructure side, which is also one of the key pillars of our economic growth, there are a number of reforms that we've undertaking insofar as the crowding in the private sector capital into the infrastructure. You know, what we have noticed, and it was bound to happen this way, that because once we liberalize this network industries, energy, we understood that we're going to need a lot of capital to flow into this infrastructure. Take energy. We liberalize the energy space insofar as the generation is concerned. As a consequence of that reform, we've seen a lot of investments in the renewables, and we all know that we need 14,000 kilometer transmission infrastructure to get that energy into the grid. And Eskom's balance sheet they don't have this money. We need around 400 billion. And the sovereign as well, we are challenged in that regard, and therefore we'll need private capital to move insofar as the transmission infrastructure. And we are setting the right incentives to enable the private capital to move in that regard. For instance, the credit guarantee scheme, which is an insurance entity aimed at setting the right incentives for private capital to move into transmission infrastructure. So it should be operational by July, and we've ourselves, I think we're putting 2 billion rands as the state to co-invest with World Bank and other investors so that we can de-risk the investment into transmission infrastructure through the credit guarantee vehicle. And of course, if it's, we'll draw some lessons from it, and if it's successful, which I think it will be given our experience of what we have seen or the experiences that we drew from other jurisdictions that have looked at this, that have implemented this credit guarantee scheme, we intend to utilize it in other infrastructure investment spaces, freight logistics, and so on and so on. I know many of you from Joburg, you are worried about water. And I think the water issue in Joburg is an indicative of some structural problems that we have in the way in which some of these trading entities are run. I mean, the minister gave a very good example in the speech, which is that when you pay money as a resident of Johannesburg, it goes into a bigger pot called the municipal budget. And then given the fact that you are in a coalition, the budgeting, it's really not done strategically. It's done on the basis that this MMC, this local minister, has a pet project, kindergartens. Okay, I've got serious, I take kindergartens very, very seriously. So instead of that money being utilized to go and fix the water infrastructure, that money just get into pet projects, and they basically starve the cows that give them the milk because they don't invest in that infrastructure. And those trading services are not able to generate enough revenue, or they generate enough revenue, but there's no reinvestment into the infrastructure that enable them to maintain the infrastructure that generate the very same revenue that they put in a bigger pot called the municipal budget. So the reform that we have been undertaking in that regard is that we need to have separate financial statements for these entities. So if Johannesburg Water is generating revenue, we need to have a see-through of the top line, bottom line, cash flow, income statement of these entities. So that there's no cross-subsidization from the revenue that they are generating without them investing this money back into these cows that are generating the milk that they drink in a manner that it does not feed the cows that are helping them to have more calves as well as more milk. So that reform is going very well. We've met a number of metros. They are willing to, there's also a grant that we use, an incentive that we've put in place to help them to do this reform. And the last point in this regard is that this will also set the better conditions for you as investors to have a see-through that, okay, if a municipality is going to raise a bond, at least for water or for energy, waste collection, you'll have a better see-through that, okay, putting money here, And you guys, you operate on the discounted cash flows. So you will see what are the future cash flow. The macroeconomic conditions are very good, so the discount rate will also be very good. So you'll have a better see-through of these entities, and it will be very good for the entities to raise capital as well. Because at the moment, the risk associated with lending money to some of the entities is quite high. So this reform is one of the reforms that I do think that as investors, you really need to really pay attention to it, because it won't only help these entities to raise money and provide better services to the residents of these metros, but metros are important geographic spaces for economic growth. These are our engines for economic growth. And if we sort out Joburg, amongst other metros, it's because many people look at South Africa through the prism of Joburg. If something goes wrong in Joburg, they know things are collapsing in South Africa. So we have a patriotic responsibility, all of us, to make sure that we sort out these metros and Joburg included, not because I'm from there, myself and everyone, but we really need to sort out that city as soon as possible. Like I said, we did not mislead you when we said the minister is coming. And his advisor is, he always advises correctly. So the minister is here. So minister, we had to kick off, but we did indicate that you are on our way. You on your way, and as I was coming here, the colleagues here, they really appreciate your stewardship of this ministry, and the results they show. I've said a lot before you can. I don't want to spoil it. I've said a lot about you, and a lot of people have said a lot of good things about you. So let me stop here, and thank you very much for the opportunity once more. I spoke on behalf of the minister. Thank you.
Well, as you've heard, there's a lot for us to get through, right? And more than anything, I think what we should be appreciative of is just this level of camaraderie that we are witnessing. Partnership in terms of sharing and distilling much information and insight, and of course, the presence of both the Minister of Finance, including the Deputy Minister of Finance, who have joined us today. I am going to take the liberty of course, continuing with the program, and we will have a fireside chat with the Minister of Finance. I am intrigued to find out if the Deputy Minister will stay on board to also participate in this Q&A, as there will be some technical analysis that we would like to deep dive into, and of course hear some of your questions before we then move on to our panel of industry experts. So on that note, I'm hoping that we can thank Isaiah Mhlanga for his contribution, as we give him a warm round of applause as he makes his way off of stage. And as has been mentioned, we are going to engage with the Minister of Finance, who had a very tough job yesterday. But I think more than anything, after witnessing the feedback, the interaction, the headlines from many of us as peers and colleagues in the industry, and most importantly, perhaps just the calmness with which he's entered the room this morning, we have a good story to share. Ladies and gentlemen, please help me warmly welcome to the front of the stage, joining us for our fireside conversation, the Minister of Finance in the Republic of South Africa, Minister Enoch Godongwana. This is a phenomenal conversation, and I think a great start to what promises to be a phenomenal discussion that we will also have with both the Minister and the Deputy Minister of Finance here in the Republic of South Africa. Key themes have been highlighted by the Deputy Minister, which really set the ground for our understanding. Many of us have processed much of the information, data, and insight that was discussed yesterday, and most importantly, also have questions on a few of the themes that might not have been mentioned. So I'll kickstart the conversation to get some clarity on some interesting points that were highlighted yesterday, and most importantly, also allow you to engage representatives of National Treasury as we try to fully ensure that the confidence, the certainty, and the outcomes that we desire as leaders in the private and public sector can be shared for us to have clarity on how we continue to create a robust economy in South Africa. To those of you joining us online, please feel free to share your questions too. We do have a team in the background that will be moderating them according to similar themes and alignment, and we will be able to address these questions to both the Minister and the Deputy Minister of Finance. I think first things first, well done. We've gotten it done in one setting, which comes as much reprieve and relief for South Africans as the Deputy Minister has alluded to. And perhaps this is a good point for us to start because it does tell us a lot more about the progress that has been made regarding the Government of National Unity. The Deputy Minister gave us some insight that there's been ongoing and robust conversation. But perhaps, Minister, can you take us into your conference just to give us some insight into just some of the bold conversations that have been had for this budget to be delivered, but more so to anchor this on a theme that was mentioned in the speech yesterday, the fiscal anchor. Not much detail was actually elaborated on that. Help us get clarity as to how the GNU is working in alignment to ensure that there is a fiscal anchor, and if you can elaborate on what that fiscal anchor is.
Yeah, okay. Let me just say, we in the GNU have learned a lot. Both sides made a lot of mistakes in the process. And by the time we went into budget 3.0, we have already learned those lessons. And I think we, out of that, matured. I can assure you the GNU is getting more and more and more matured. We're getting to an elections now, there will be some throwing dust at each other. It's normal in politics, there's nothing wrong with that. So if you look at the fiscal anchor, what does the fiscal anchor does? On the monetary side, we've done, and we've got an anchor now, which is inflation targeting of 3% by 2027. So there's clarity for everybody as to where the direction of monetary policy is going. A similar exercise is necessary on the fiscal side to provide stability and credibility of our fiscal path. To do that, you need some regulatory framework. Well, our proposal at the moment is not to do what possibly has been done in Germany or in the using Maastricht and saving. Here's a 3% figure, irrespective of which every administration will comply with this. No. What we want to propose is that every time an administration after elections comes into place, that administration must be able to commit to a fiscal path and table that fiscal path in Parliament, and Parliament be able to hold that administration for its 5-year period towards that fiscal path. That's how we want to construct it. But of course, it's going to be a major debate. This time, probably not a major debate in the DA, probably going to be a major debate in the ANC and other political parties. There's always some rambling, even in the ANC, about, in my view, fear of the unknown. So that's where we are at the moment about the fiscal path.
Any timelines as to when we can expect some kind of feedback?
We intend to have intensive engagement with all major political parties between now, culminating to a final decision by Cabinet towards the end of October, which will then be part of the medium-term budget policy statement in October, assuming everything works according to plan.
Got you on that point. Perhaps, Deputy Minister, I can come to you here just to reflect on some of the outcomes that have been shared, especially with regard to our debt consolidation. We've come a long way from the 2024 budget speech where we had to tap into our reserves and every South African got to understand what GFRECA actually is in terms of maintaining our debt repayments. Many have raised questions regarding the sustainability of the debt consolidation, especially given that the underpinning of our growth still sits at fairly muted levels. Help us take into account some of the considerations with regard to our debt consolidation path and how sustainable this is, especially in light of the lack of fundamental growth in the economy.
Yeah. So, I mean, fortunately, this time around, we've not revised our growth downward. I think it has been years now, because every year we tended to always revise our growth downward. This time around, we said our growth will be 1.6%. 2028, it will be 2% in terms of the projections that we have. And as the minister will always say, and treasurer will always say, debt in itself is not a problem. The question is whether you can sustain that debt. And if your economy is growing at the rate at which it can generate sufficient revenues to service it, it's not an issue. And we've also said that it's important for us to contain our expenditure through the TAS, the Targeted Service Program. We intend to reduce our expenditure by 12 billion. But also when you look at the composition of expenditure, infrastructure, capital expenditure is growing compared to compensation of employees. 5 years ago, the big expenditure line was SOEs, wages and all that. There's been a significant shift insofar as that is concerned. And like I said right at the beginning, the debt service costs are also going down, precisely because of the confidence that is emerging in our economy, in our bond, and as a consequence of that, the debt service costs are also going down. And I think for us, you know better than I do, that if the benchmark bond is 2030 now, R2030, it's lower. It's also good for the entire economy, because that's a starting price for the economy as a whole. As in, when people, I saw Leila here, the JSE, I don't know if yeah, there she is. Yes. Her companies that are listed there, the investors, their starting price, the required returns, it's the sovereign bond, the R39. It used to be R186. Sure. So if it's lower, it means that the cost of capital will also be lower. So I think there are a whole range of things that through our fiscal policy and microeconomic interventions, structural reforms, as well as infrastructure, something that the minister, when he started, he even had a board in his office. So, infrastructure is going to be my priority. Someone stole it, but I think he found the board chart.
The inner workings of National Treasury. Yeah. Maybe on that note,
and it's not me. It's not me who it was not stolen, Minister. Probably it was just misplaced.
Well, we hope it's been returned, Minister. But maybe that's a good aspect for us to actually delve into, right? Because as has been mentioned, there's a lot of macroeconomic factors working to our benefit. Yeah. It is reflected by the market and the emerging market space, which we will reflect on with some of our experts. But growth really does need to be underpinned. 2%, not bad, sure. But not ultimately the target that we've been looking for, and not fully in alignment with many of the development plans that we've had in the past, like the NDP, and of course in support of Operation Vulindlela. Perhaps, Minister, this is also where you can elaborate further on just how aggressive we need to be on the structural reforms that need to take place to capacitate and facilitate further growth, and most importantly, offer the confidence to private sector leaders who are present here in the room to unlock more capital.
You know, October, Isaiah says to us, your chief economist, says to us, it seems to me, guys, when you set your eyes up on something, you achieve it. Mm-hmm. Your debt to GDP, you're this, you achieve it. Why don't you set your eyes on 3%? Am I?
And look where we are now.
Now, that figure is achievable. Now, let me put it this way. The numbers we are giving you are the focus we're giving you is business as usual. That if we continue at this rate, and therefore the economy will grow at this rate. But we all know if we work harder, a different level of growth is possible. For instance, not as the Bureau for Economic Research said, if we were to work harder on the structural reforms, we could get into a 3.5% growth level. So the numbers we're giving you is business as usual,
Okay.
but we want behind the scene to work harder. Yes.
Current effort, but we need to apply more pressure, perhaps
To
using...
meet Israel's target.
to meet Azar's target of 3% growth. Hopefully 5 can be a reality. I've been selfish with the panel of the minister as well as the deputy minister. There are 2 at least other themes that I'd like us to deep dive into, but I'm confident that we can take it to the floor just to address any key concerns and questions that many of you as audience members do have, including to those who are joining us online. If there are any questions in the room, please feel free to raise your hand a little higher, just to ensure that my colleagues on the floor are able to identify you and address any questions that you might have. This is a very shy room for a Thursday morning, and perhaps maybe indicative of the level of confidence that we have in the budget speech. But I'll tell you what, as you warm up for these questions, please do raise your hand up high. We will ensure a roving mic does get to you. But I do want to touch on another key theme that perhaps was briefly mentioned within the budget speech, open to the both of you here. The synthetic financial center. This, we understand, has been elaborated on very briefly within the budget speech yesterday, essentially creating an ecosystem where key players and asset managers who are based here in the room, and many of you who are familiar with the financial services space as asset managers, have an opportunity to essentially manage offshore funds locally. Give us some context as to how this is envisioned to work, and perhaps building up on your opening remarks and keynote remarks, Deputy Minister, how this also speaks to that unlocking of additional capital, specifically to facilitate private-public partnerships. Open to the both of you. I guess, Minister, you take the lead, but happy for the Deputy Minister to add.
Yeah, let me start. Maybe DM will give color to it. As things stand, if you want to, you've got to go take money outside the country in order to invest in other things. I mean, for our own people, our asset managers can't use other things. They've got to use foreign asset managers, like BlackRock or so on and so on, as PIC has done. What we want to do is to give that competitive edge to local asset managers and everybody who invest.
This is good news because you're telling us that you're confident in their capabilities. This is good news. You're telling us that you're confident in their capabilities and facilitating their growth.
Yes, we've got a solid, sound financial sector in the country. There's no reason we should be worried. In fact, we must make that financial sector to be able to compete. And that's the intention. You want to add, Dian?
No, I think you've said it a mouthful, Minister. I think the only thing I'll add...
That's your best. You are the one who's investing money.
All what I can say, it's also a reflection of great partnership that we have ourselves, Treasury, and the financial sector, because some of these issues, they come out of our attempt to make our financial sector competitive. Leila, JSE, and other people who've been working so hard on a whole range of issues just to say, how do we make our financial sector competitive? So I think it's not just focusing on the structural constraints in energy, electricity, but everything. And the financial sector, it's one of them. And there's a lot of great work that is ongoing insofar as making our financial sector competitive.
100%. Happy to take... Oh, there is a question from the floor.
Thanks, Gugu. And my point is really a point that I wanted to put to the Minister and the Deputy Minister, and that was on this synthetic financial centre. About 10 trillion rand of South African assets are currently invested offshore by locals. And I just wanted to commend and congratulate the National Treasury in introducing this very important initial step. As the DM has said, we've been leading an initiative with private sector across public and private markets to try and drive international capital back into South Africa, and we think now is the right time. We have been lagging in competitiveness. We are now 94th on the competitiveness indicator, behind Kigali and Mauritius, and we think now is the time for us really to drive things forward, and we're very pleased that the buy side can now run and manage dollar-based or hard currency-based funds locally based on the minister's speech. And we anticipate that this might be a platform to expand into potential hard currency listings, accepting hard currency collateral, and we're working with National Treasury to try and encourage that. But I just really wanted to acknowledge and applaud the very monumental and probably the most important step that we've seen in the last decade or 2 decades, policy-wise, to grow the competitiveness of our centre in South Africa.
Thank you so much for that, Leila. Appreciate your feedback and, of course, positivity in terms of what you've indicated. There was a question. Your hand was up, sir, and we'll come to you in the front. Isaiah, I'll squeeze you in, but hoping to prioritize some guests. Thank you. Go ahead.
Good morning, Rashad here from Ford Asset Management. Congratulations on a very stabilizing budget, and thanks for increasing the brackets. It's been a while. I think we all appreciate it. Just a question on NHI. You increased the tax allowance on medical aid contributions, and that's a little bit contradictory because, you know, with NHI policy, there's an expectation that those will be phased out. And I think when you talk about confidence in the country, NHI has been a big overhang for, it feels like a decade now, where there's a constant push and a lot of uncertainty on how the hospitals and the medical aids will function going forward. What's the plan? And we don't ever really get a resolution. So maybe we can get an understanding of the debates that are happening with the Minister of Health, the decision around increasing the tax credits, and how soon do you think you can get this issue resolved and get this overhang off the country?
Thank you so much for your question, sir. As we note that, I'd like us to take one more question just in the interest of time. If you could please raise your hand, sir.
Good morning, Minister, Deputy Minister, Shane Watkins, All Weather Capital. I must compliment you on a budget that I think speaks to absolute clarity. It's one of the first times there's a lack of ambiguity in the budget, and I think it's very clear what you're trying to do. I have a comment more than a question, and I think one of the tragedies of South Africa is we seem to be continuously exporting our capital rather than attracting foreign capital in. And I think this is something we need to interrogate. In one of the previous budgets, we allowed, in terms of Reg 28, pension funds to take an additional, let's say, 10% of their money offshore, which was essentially an export of capital. But one of the factors that this also did was it meant that foreign fund managers that generate fee income on our money are taxed in foreign jurisdictions rather than here. So I really want to applaud you in trying to hand out money to South African asset managers, because the tax on those fees that are earned will now be earned in South Africa rather than in foreign jurisdictions. But thank you very much, and again, congratulations on the budget.
Thank you so much for your questions and comments. Really acknowledge it. And I think this is really refreshing to have leaders of business and private sector really coming together to actually voice their level of confidence in the fiscal direction that we're taking and an understanding of the course that we're heading onto. And also commending you and supporting you in your efforts to drive the synthetic financial center, a new word that many of us will become very accustomed to, but most importantly, understanding its impact. So we acknowledge that from Shane as well as Leila. Thank you for your feedback. Let's touch on the question regarding NHI. Where are we in terms of clarity regarding the confidence overhang and timeframes that can be shared regarding its resolution on the funding?
We are in court.
With multiple partners, we are aware.
There's 14 cases.
Oh.
14. So somebody who's pragmatic like me suggests that if we're going to deal with all of this, although the Constitutional Court has tried to find a way where you can club them together according to categories, as I understand now, there are 3 categories. There are those that are challenging the constitutionalities, there are those that are challenging the processes and so on. But if you take that, all of those cases are going to take us a while. And we're not going to be able to go on with the NHI. And I was quoted correctly as having said in Parliament that it's time we needed to find time to sit around the table and find each other on NHI on some of these issues. And I think that is gaining traction. But in between, a couple of things need to happen. We need to be saying, how in fact are we going to roll out the NHI? What is going to be covered by NHI? Because that's going to determine its cost.
Mm-hmm.
Having done that, we then say, how are you going to fund that basket of benefits? The issue of credits and so on come in the picture once we know how much are we going to fund for what, for which basket of benefits. For now, it's difficult for me not to allow growth of credits while waiting for the unknown. I'm under pressure now. That's why we've agreed for a marginal increase on the tax credits for now. But it does not negate the NHI. I made the point yesterday that we'll be upgrading certain facilities as part of that preparation process for the delivery of an NHI. So first thing first, we need to find each other outside court. And secondly, we need to define exactly what are the benefits that are going to be covered, and therefore what are the costs, and decide on the delivery mechanism. All of those things we're discussing. Are you happy?
I believe, are you happy? I'm getting a nod. But I'm quite keen just to squeeze one in there, the sooner
Yeah.
the better. What do you need from the private sector to come on board and, of course, I guess, expedite participation?
One thing, they are the applicants.
Other than dropping the cases, I guess.
I'm not saying they must drop the case. I'm saying they must take the initiative. I think there's a willingness on the part of government now. Now, even our colleagues in health, I think they come to the conclusion that they would be agreeable to finding each other on some of those areas of disagreement so that we should be able to move with speed.
Got you.
You know, in the last meeting like this, it was a News 24 one. Carol Patton asked me the question, how are you going to fund the NHI? Because it's expensive. I then said, how much is it? Because there's a rumor that, hey, this NHI is a monster, it's so expensive. But if you ask somebody, how much is it? Where is the number? Where
Do you
get
have the
it?
number, Minister?
No, I don't. That's why you'll never hear me say it's expensive, because I don't have the number. So it's sooner we get to those details and actually have the number and know what are we faced with.
Got you. Well aware that there have been many participants in the private sector who've shared their views on that potential figure. We are going to wrap up the conversation that we've had with representatives of National Treasury. There's a lot more that we can touch on. We haven't even touched the tip of the iceberg when it comes to some of the proposed reviews, when it comes to tax on online gaming and gambling platforms, the proposed 20%. I understand that is still open for public commentary till this Friday in the budget review. Of course, ongoing themes in terms of support for South African entrepreneurs and the benefits that we find. But I do want us to conclude with a key theme that comes up and perhaps will be a very clear reality for us come the end of April 2026. The SARS Commissioner, Edward Kieswetter's tenure will come to an end following a 2-year extension that was provided in the year 2024. SARS, as we've seen it, coming into the pandemic, out of the pandemic, and of course, a checkered past, given the concerns regarding state capture, has really paid off, I guess, in terms of the investment that National Treasury has put into it to modernize, digitize, and fast-track the level of projections and tax collections that we've seen. As you reflect, perhaps Deputy Minister, or perhaps yourself, Minister, on just the leadership of not only the SARS Commissioner, Edward Kisveta, but the outcomes that have been achieved by SARS as an institution, share your observations. Has the money been worth it? Quite clearly, I guess it has been. But also if you can share insight into the progress going forward to appoint a new commissioner from the 1st of May.
It's above my pay grade.
I thought you were going to reinforce what I said yesterday.
No, if you want me to, I can. I always reinforce what you say.
Yeah.
My media colleagues are in the room. We want to break some news. So
Let me just say the couple of issues there are two issues. There's the performance of the current commissioner. There's the process of a new one. I make the point, in order to understand the performance of this commissioner, you must understand the status of SARS at the time he took over. When he took over, SARS has that emerged from state capture as an institution, close to dysfunctionality. To his credit, Edward has piloted SARS and through his leadership to what it is today, and the President in Sona said is one of the best institutions that we've had. In that sense, the commissioner has done an excellent job. He's got a state-of-the-art, he's passionate now about AI and so on and so on. He's actually helping, by the way, Home Affairs via SARS in terms of the technology aspect and so on and so on. So if you look at that, over the 7 years, he's done an excellent job. Of course, I didn't say he must leave. In December, he wanted to leave by December. I said, why not in a hurry like that? We don't have the capacity to appoint a commissioner in that so soon. He probably wants to do his own things now. So that's the process why we congratulate him in Parliament yesterday, and we do it in every platform we find ourselves. The process of the new commissioner, the President has delegated to me the powers to run the process, not to appoint. To run the process of the appointment of a commissioner, I've set up a panel headed by former Minister Nene. There are quite a number of credible people in it.
where are we in the interview process now, in terms of that process?
By the way, the CEO of RMB is part of the panel, Mary. So we make it to make as credible as possible. So they have made their own recommendation, okay? Their own recommendation. I'm not at liberty to tell you. All I'm saying, they've got the reason I'm not at liberty to tell you is that the President may say, oh, I see the names, I'm not happy. And therefore, I'm not even to run another process now. I've decided to appoint Isaiah, for argument's sake.
Sure.
Right? The law does allow him to do that. That's what he did with the NPA. There was a panel of interviews, said, okay, I've listened to all of this thing. I'm not happy with those interviews, but I'm appointing Advocate Mutibu, who was not in the panel.
Sure.
Even with SARS, he has got that capacity. But I can tell you now, by the 1st of May, there will be a new commissioner. In fact, I suspect by the 1st of April.
It won't be a fool's joke.
Yeah? No. No, it won't be full stop.
Fantastic. Minister and Deputy Minister, we appreciate the time that you've given us. You've been so gracious to actually extend the time that you've shared in exchanging knowledge, insight, and most importantly, clarity regarding our fiscal direction. We don't take it for granted. And as you can tell, members of business, government, public sector institutions are also present here today. And I believe that we can safely say that we are confident, but perhaps that can be reflected in the applause for you today as we acknowledge your time. Thank you for your contribution to the conversation as you continue to join us on for this event as we continue with the panel discussion. But on that note, a big thank you once again to the Minister of Finance, Minister Enoch Godongwana, and the Deputy Minister of Finance, Dr. David Masondo, for joining us today. Perhaps your applause, in true South African culture, some ululating, if there's a vuvuzela under your seat, or even a onses wenners, hulle weet nie wat ons weet nie, is going to be acknowledgement for how we celebrate and acknowledge the fiscal direction we have today. Ladies and gentlemen, please give our representatives of National Treasury a round of applause.
Thank you.
Yes, Minister, we do understand you do need to be relieved. You are on your way to another engagement. As many of us can imagine, the Minister, together with the team at National Treasury, is on a roadshow, speaking to many participants locally and abroad for further engagements, and really underscoring the messaging that has been shared with us today regarding the fiscal clarity, fiscal direction that we headed into in South Africa. Yes, we might no longer be tightening our belts. We're not letting it loose just yet, but at least there's a sigh of relief to say we know where we're headed to and we've got clarity. So thank you again to the representatives of National Treasury for joining us today. We are aware that we are under pressure for time, and we do want to keep to the dynamics and program that we've designed for you. On that note, we are shifting gears to move into our panel discussion, hearing from industry experts who give us a better reflection of the market dynamics and the market response, also taking into account some of the social aspects we should consider. So I'm going to welcome our panelists up on stage. Their bios are available online should you need them, but I can assure you these are credible individuals who have a vast level of understanding of the macroeconomic themes, the fixed income environment, investment appetite, and even the political dynamics that are underplaying and, most importantly, influence some of the outcomes of fiscal policy. Please warmly welcome to the front of the stage Dr. David Faulkner, Global Markets Research Lead at RMB, who joins us today, followed by Mr. Sam Mkhokheli, Political Analyst at Mkhokheli Advisory, Mr. Adam Furlan, Portfolio Manager for Emerging Market Fixed Income at 91, and Ms. Nomatibana Okello, Managing Director and Senior Portfolio Manager at Terebinth Capital. A warm round of applause to them, please, as they make their way up on stage. Mr. Sam Mkhokheli will also be joining us for this panel discussion. Oh, the applause was quieter. Perhaps a little bit more energy on the back of what we heard. Thank you so much. This conversation is one that we're likely going to speed up, as I'm aware we've only got about 15 minutes for it. Mr. Sam Mkhokheli joining us up on stage. Thank you again for your time and participation. First things first, I guess, quick response, David, your response to the budget speech and most importantly, the overview we had from National Treasury.
Great, thank you very much. Look, I think there's a couple of things really. One is that the Treasury has outlined an ongoing process of fiscal consolidation. But I think importantly for us, it's what hasn't been said so far this morning that is perhaps most important when we think about the fiscal outlook. Because when I look at the Treasury's numbers, there's not much in there for the commodity windfall. So we've seen precious metal prices surge over the last 12, 18 months. We're starting to see it in some of the macro balances, in some of the fiscal numbers, in some of the export earnings and trade data. But when we look at the projections, it's hard to see in the fiscal projections going forward. So we've got a fiscal consolidation strategy without a commodity windfall. So in our view, probably the big upside is that this is a budget that may well under-promise and over-deliver, and as we get these revenues coming through, we're going to see sustained probably fiscal gains relative to the consolidation path charted by the Treasury in yesterday's presentation.
So it sounds like they're keeping their powder dry. Should that take place where perhaps we get an upswing and more confidence and revenues for National Treasury, do you believe that that might unlock a lot more potential in terms of how we're perceived by international credit ratings agencies?
Certainly. I think if we could see the kinds of improvements, we think you could be talking about 0.4, 0.5% of GDP better than the Treasury has estimated at this stage for next fiscal year, 26, 27.
Yeah. That's
going to be a marked improvement on the deficit numbers we've currently seen. It's going to be a marked improvement on what is being penciled in. And I think that delivery of consolidation, that firm illustration that debt is going to start to come down in the near term, I think does lead to an upside for ratings through the course of this year. We would imagine that you'll get further rating upgrades. We're penciling in upgrades from Fitch to BB, from S&P to EE+ by the end of the year, and a lot of it has to do with this fiscal outlook.
Got you. Adam, perhaps I can come to you here because you take care of the fixed income space, and over the last 12 to 18 months, as we've witnessed, there's also been a lot of shifts and influences, largely given just the geopolitics, especially globally, that are at play. When you review South Africa's budget speech, the fiscal plan and direction we hear from National Treasury, is this resilient enough to withstand any further blows and influences from the geopolitical dynamics we see globally?
Thanks, and morning, everyone. That is a great question, and I think that comes into the point that sort of what Treasury put out in the budget was a scenario analysis of what happens or what primary surplus is needed to stabilize debt if under weaker growth scenarios. So this budget is premised on a 2% growth over the medium term. It needs to get there to consolidate debt. And if it doesn't, that's the questions we need to be asking of Treasury is what is your plan if we actually don't get to that 2% growth due to factors out of their control. One thing I will say is that the issuance change announced after the budget was a change in mix. They reduced longer-term funding in favor of issuing more shorter-dated Treasury bills. That is, for me as a bond manager, like what I want to hear, and also a very positive signal in terms of how Treasury is feeling in terms of their confidence on their forecasts and their ability to meet obligations. It's been a gripe we've all had for a very long time that they issue the most expensive debt at the longest end of the curve, and that dynamic is changing, and I think that is a very positive signal in terms of how they're thinking about their forward-looking financing requirements.
Got you. What about the market response that we saw just yesterday? Quite a significant level of confidence, but maybe share some perspectives that we understand if this can be sustained.
Sure. In the lead-up, there were some expectations building around issuance cuts and as well the fiscal anchor. The issuance cuts materialized. Well, a very positive mix change materialized. The fiscal anchor was promised and kicked down the road. No firm details or change there. The market liked the budget, and that issuance change definitely resulted in more inflows, long-end yields outperforming. And going forward, we see scope for it to continue to flatten. If you think where we've come in terms of issuance, in 2021, those sort of times, issuance peaked at 6.6 billion per week. We now sit at 2.65. That's a 60% issuance cut in longer-dated nominal bonds. You can see the impact that's had on the curve, and we expect the flattening to continue.
Perfect. Noma, perhaps this is where you can also weigh in, because it's a space that you also play in as a portfolio manager, not only looking at the fixed income space, but equities as well. And again, much of the underlying story for the fixed income space is just renewed confidence in emerging markets because of what we see largely with economies like the US, but also when it comes to equities, all about gold. It's really had the Midas touch for us in underscoring much of this growth. I'm quite keen for us to align just the outcomes and expectations set regarding the fiscal plan and structure and the short to medium term outlook and influence that this could continue to have within the investment realm that you take care of. But your perspective as a build-up from the themes that have been shared.
I mean, in terms of the portfolio management role I play, it's primarily in the income space, but as a business, we do participate in the other asset classes. But obviously, just from the high-risk asset classes, the growth picture and the positive growth outlook that the National Treasury is seeing is obviously positive for the equity markets in general. So that's an asset class that we do see that there's potential relative to what we've seen in the bond market, which has actually done a lot of the pricing of the good news already. I do think from a reaction perspective when it comes to the bond market, interesting enough, in terms of how the sequencing happened yesterday, the sense on the issuance cut actually happened later on, which actually, and before that, we actually saw the market a bit disappointed with the news. And it says that in terms of the outcome, the market has pretty much bulled itself to perfection in terms of the expectations from the budget. We got the fiscal consolidation path a bit disappointing as expected for this year. The primary surplus was there. We got the revenue numbers. They were nicely conservative, but there was something else that the bond market was looking out for, and that's why that issuance cut is also quite positive that they came through, and most importantly, that they came out and said, despite the maturity profile that we're expecting in 2027, 2028, they can sustain it. And that's what the market has been concerned about, the fact that they can still sustain it. So that's been a positive from their side.
Got you. An interesting theme that perhaps all of you have been highlighting on, specifically looking at the global market dynamics, perhaps better than expected growth might be something that comes through. We do see renewed confidence and upswing to commodity prices. This almost sounds like we're slowly building up our way to an increased level of confidence. And maybe, Noma, in your view, what would it take for us to get another credit rating upgrade from a credit ratings agency in South Africa? What is that thing that could just push us to a greater level of confidence globally?
I mean, it is out there. Most of the rating agencies do talk about our debt numbers as one of the items that needs to be put under control. So therefore, that consolidation path when it comes to the debt to GDP needs to start to improve. So it will be a story of growth, nominal GDP, most importantly. And then I'll just go back to the debt number, because this is where now, because nominal GDP is not going to be playing its part in terms of getting that ratio down. The National Treasury perhaps has been comfortable with how market dynamics currently are. We have positive sentiment when it comes to the bond market in South Africa and also from the global investor base. And you've also seen it in how the buyback program has been very successful, and also how the optionality that we typically get in the bond market from essentially when bonds are issued on Tuesday, we have this optionality coming through on Thursday, and most of the investors have been taking them up. So I do think that there's a risk that they're kind of comfortable with this current setup. It is very much sentiment-driven. There's positive sentiment in the market, but the long-term picture that they'll need to focus on eventually is actually getting that debt number down. It was mentioned by one of the analysts that they should look in perhaps buying back some of their bonds, or actually starting to buying back some of their bonds in order to structurally reduce the actual debt number.
Got you. We'll be sharing these notes with the National Treasury to consider in conversation. Sam, I've kept you quiet for way too long, and there's quite a few themes that I'm hoping we can touch on. The Deputy Minister mentioned that the municipal elections have played no role or influence, perhaps, in terms of driving decisions and conversations. But if we look at the outcomes of this particular budget speech, there's a lot of reprieve for us as South Africans. Increase in personal income tax brackets. We do see significant level of reprieve, especially for small and medium-sized businesses when it comes to the VAT threshold, and of course encouraging us to save and invest for the long term, given the increase in thresholds regarding retirement annuities as well as tax-free savings accounts. In your view, is this a budget for the people, conveniently in what happens to be a municipal election year?
Look, it's not a populist, easily electioneering type a budget. They've given quite a lot, but generally you wouldn't be able to do fiscal consolidation and still go populist and do an electioneering budget. When you do an electioneering budget, you don't care about where the money comes from and about the credibility of the budget. So you wouldn't be able to win both. But they've given a little bit to make it easy for the consumer, taxpayer, for the different parties to campaign better. But also, what you're seeing in the budget is the GNU itself, starting from the SONA. The GNU makes about 70% of our parliament, and each party got something in the SONA, and they're still getting it out of the budget. I don't know how the Treasury team has been able to walk this tightrope so well this time around. But in terms of the substance of an elections budget, it absolutely is not a first when you look at the trends in the political economy generally and how they would do that. The second thing is that the issues in local elections are not dealt with, they're not fiscal issues, it's political leadership issue.
Yeah.
The water crisis is a political leadership
Yeah.
issue. So, and also the elections are far out from this budget. Whatever you do now, come November when the campaign is intense, we'll all have forgotten that we've got tax breaks here and there.
Yeah. So clearly, maybe easier to say that GNU is easy to handle at a national level versus at a municipal level, but all of them come with their own nuances. I'm keen just to hear your perspective on municipalities because it's very clear that the large majority of them are under significant financial strain. Are we seeing National Treasury doing enough there just to adequately monitor, measure, and control some of the outcomes in terms of delivery and accountability?
Look, they're punching above their weight in terms of the things that they're trying to do with the municipalities. The first thing is that the municipalities do not report to them. It's another sphere of government. It's got the law, it's got the constitution, and the people who drive municipalities do not have to listen to one of the things that they do. But the treasury gets out there, they dangle the carrot here, there, whether it's a municipal infrastructure grant, if your finances are good, we're going to give you a bit more money. So that's what they do. But the people who steal in local government don't want more funding from the National Treasury. They're happy with a 95 billion rands budget in the city of Johannesburg. They're going to steal from that. They're not going to fix their municipalities so that they get more money from the National Treasury. So the Treasury is really trying beyond its remit to fix things that it really can't. With a political problem across the political parties do not have enough good politicians to run our city, so that Helen Zille has to move from the city of Cape Town, where she lives, she goes back to the city of Perth in Johannesburg, because there aren't enough good politicians in the DA itself. The ANC doesn't have anyone who can counter Helen Zille. They are looking around and hoping who could counter Helen. What do we do? Herman Mashaba is to come back because there's no one in his political party who can counter Helen Zille. So we have a big political problem that can't be resolved by the Treasury.
Yeah, got you. Lots of themes there. Any questions from the floor that we can take? Sir, your hand has been noted. If there is another hand, please feel free to raise it.
Just one comment, and maybe you guys can all comment on it. I was at an event yesterday, and Chris de Visser was there, and he was saying that obviously ShopRite are releasing their results early next week, and in those results, they're going to intimate that the actual inflation rate in South Africa is way below what the headline CPI numbers are suggesting. In fact, a lot of their baskets are showing that we're actually in a deflationary cycle. So I suppose just, do you agree or disagree with that? And sort of what are the implications if we are sort of heading to a state where inflation rates can actually drop significantly in the coming months?
Got it. Love it. Love an economic question. One more question that we're going to squeeze in from the floor, if there is any. Fantastic. We'll come to you, sir.
I'll take another one. I mean, we're all celebrating the change in issuance strategy from, just putting a lot into the long end. But, I mean, the horse has bolted. So that would have been a great idea when yields were 11, 12%. They issued when yields were, they issued a lot there. Now the bond market's rallied 300 bips. It's a bit of a marginal thing, and it's a trade-off. Issue long and lower your risk, or issue on the shorter end, lower cost, but with a bit of tail risk. So I know the minister's not here anymore, and so we can speak a bit more openly, but is it the right strategy now that bond yields have rallied to this extent to stop tapping the long end?
Fantastic. Thank you so much, gentlemen, for your questions. I'm going to direct the first question to you, David, if you can respond to it, just in terms of the adequacies and the reality of our inflation. And perhaps, Adam, if you can take the bond strategy conversation. From there, we'll get concluding remarks as well from Sam and yourself. So let's start with your response to inflation.
Look, I mean, on inflation, we're informed by what Stats SA tell us, and we generate our forecast based on their CPI numbers. I think we're clearly living in an environment where there's fairly significant disinflation and low inflation pressures in South Africa. You've got certain pressure points when it comes to things like meat inflation. So you've got this kind of diverse set of experiences in your food basket where bread and cereals are very, very low and fresh produce prices are falling, but meat inflation is very high given foot and mouth pressures. You've got issues around administered prices, which are a relatively sizable component of your CPI basket, around where medical aid insurance rates are going. And that, I think, those are factors that mean that structurally there are factors that put a floor, which is relatively elevated on how low inflation can go. But I mean, we see inflation running at 3.3% this year, 3.4%, 3.5% over the next 2 years. This is a pretty positive inflation backdrop when you think about South Africa historically, and it's a backdrop that is also going to support, we think, further policy easing from the Reserve Bank, so more relief coming through interest rate cuts later this year.
Got you. So we're not in a deflationary environment.
Not in a deflationary environment, yeah.
Got you on that one. Adam, response to bond market strategy?
Yeah, with regards to the issuance strategy from Treasury, it's been a strategy they've adopted 2 to 3 years ago, tried to reduce borrowing costs, and it has been difficult. Obviously now, shifting shorter, less of an impact. You know, the curve has flattened, but we are still offering 4 to 5% real yields in the long end of our curve. And, you know, locking that in over a long period of time, if we are on a path to investment grade, is probably not the right level to be issuing at. I think that, you know, it definitely does increase our risk profile, the risk to our issuance strategy running higher rollover risk. But where we come from with very low external debt, quite a long dated or duration heavy curve, we do have room to continue to try and cheapen our funding mix.
Got you. Hope you're content with that response, but there will be time to interact. As we are prepared to get our closing remarks from both Noma and Sam, just a quick litmus test in the room. As we've had observations, listened to engagements from National Treasury, heard some expertise and details from market leaders, I'm quite keen just to gauge, in terms of this year's budget speech, how many of us view it as a glass half full? By show of hands. Glass half full? Okay. Glass half empty? So if anything, we can tell that as South Africans, we're feeling a little bit more confident. If anything, your hands were here, so we're a little bit more confident instead of boldly confident. I asked this question deliberately because, Noma, you work within the investment arena and perhaps can share your perspective on what this budget means for business. Leaders who are building their confidence, ensuring that they're able to roll out capital, but largely need a lot more certainty. Sam, I'll come to you because in as much as we are business leaders, entrepreneurs, and global participants, we're also proudly South African, who want our water coming out of our taps, who want fewer potholes on our roads, and just some efficiency within our systems and day-to-day life experience. I'd like you to share your closing remarks on what this budget means for us as South Africans. Noma, let's start with you. We'll get your perspective, Sam.
So I'll just end, and this is me wearing the MD hat now, in that as South Africans, I do think we are positive towards this budget because it's a better reflection of reality. We've had years where it's been either very optimistic and then it's pessimistic, but this is now a better reflection of reality. And as businesses operating in South Africa, we are well versed on the problems on the ground, and the reality is both positive and negative. So it's quite positive to see that they are listening to us, especially as, for instance, something that hasn't been mentioned is just some certainty, for instance, for the hedge fund community, which is something that's also been an overhang in terms of how it is seen in relation to the broader CIS community. So we're starting to get to a point where they're starting to listen. To all these submissions that we've been putting via CISA, they're starting to listen one way or another. So I think just in final, there's so many other examples, but I do think it's just a better reflection of what is happening in the ground, and it's also demonstrating that via these commentaries that we're making, via these industry bodies, someone within that division is actually listening.
Sounds like we were going, whew, finally.
A bit.
It was worth it.
Yeah.
Sam? Is it worth it for us as South Africans in our day-to-day lives?
Look, these are our best years, really, and things are looking great under the circumstances. We've got a terribly slow government. It takes a while for Operation Vulindlela to kick in, but you see what they're doing. So there's a bit of stability right now politically for all these macroeconomic issues to start looking good. But it's not going to be like that forever. We've got an election that coming in. The ANC is headed for a bloodbath. The DA has plateaued, can't grow. So the election is going to be intense. And they're going to be tearing, they'll be almost killing each other. There will be blood on the floor, metaphorically. Metaphorically. That's what you're going to get. So what happens with that is there's going to be a question about the longevity of the GNU.
Yeah.
As much as it's stable, but we will never know. The ANC has an election next year. We know what the ANC does. It's vuvuzela politics. So come next year, it's going to be a completely different political arena. whilst the economics looks good, it's an opportunity to do a whole lot more to grow the economy.
100%. If anything, I think we've had phenomenal insights from all of our panelists today, helping us really traverse a multitude of conversations and themes, but that all take us back to the reality of what we face on the ground here as South Africans. The geopolitics and global dynamics will always be there, but those are exogenous factors that we can't influence, but for the moment are playing to our favor, so we keep with the theme. Fundamentally, at least we are seeing a sense of debt consolidation unfolding in South Africa, and hopefully with the right partnerships where that capital is allocated and other ministries and departments following through with the reforms, we will see progress in South Africa that can translate into enhanced economic growth. Naturally, for us as South Africans, a sigh of relief and a little bit of reprieve that does offer some assistance to encourage a level of buoyancy within our economy. And of course, this does also speak to just the growing level of confidence and support that we see from many of you as key stakeholders within the business arena, specifically in financial services, as we do see recommendations and feedback being followed through with. If you ask me, to use a typical South African analogy, we all gathered at the braai. We've got the salads in place, the pap, the garlic bread, and the chakalakas on standby. The salad is just being finalized, but we're starting the fire. There's still a debate about whether to use coal or wood. It's a cloudy day, but one thing's for certain, the braai will be had. So hopefully, as we have our tools in order, there will be a level of robustness, some optimism, and of course growth that we can see being sustained in South Africa's economy. Ladies and gentlemen, we are aware that we've run over by a solid 10 minutes. We appreciate your time, your flexibility, and your camaraderie with us for joining us once again for this RMB Think Budget 2026. Please do continue to share your feedback with us in the days to come, where we will solicit some of the outcomes and information that you've heard here today. We trust that it's been fruitful, insightful, and most importantly, encouraging about the reality of the economy that we live in. And hopefully, by the time we touch base again in October, there'll be more favorable outcomes for us to reflect on. So on that note, to you here in the audience, those of you who have joined us online, thank you for your questions and feedback, and of course, engagement. And most importantly, to our panelists, taking the time out to join us for a quick fire conversation, just reflecting on some of the insight. We appreciate it greatly. Noma, Adam, Sam, as well as David, can we please give them a round of applause as we make our way off stage and conclude. Thank you again for joining us for RMB Think Budget.